Hello and Assalamualaikum warahmatullahi wabarakatuh. And a very good day to our beloved lecturer, Dr. Wan Nur Hazlina binti Wan Juso, and all my fellow friends. So for today, we are from Group 3. We'll be presenting to you guys about risk management in Islamic finance based on Public Islamic Bank Berhad. Hi everyone, my name is Aisyah binti Harun. I'm a matric 2019404656. For the introduction, as we know that risk management is permissible in Islam. From Sharia perspective, financial risk can be classified into three, which are forbidden risk, essential risk, and tolerable risk. Risk management is very important in the banking industry. It is also including Islamic banking in order to ensure the reliability of the operations and procedures being followed within the banks. Risk management is now recognized as a key activity for all corporations, banks, financial institutions, and others. There are two general approaches to risk management strategies for banks as well as other organizations, which are risk decomposition and risk aggregation. There are many Quranic verses that guide mankind to have risk management in wealth and financial affairs. It states in Surah Yusuf, verse 47 until 49.
Assalamualaikum warahmatullahi wabarakatuh. My name is Afza Afrina binti Afkazaidi, and I would like to present to you guys about risk in Islamic finance and how Public Islamic Bank Berhad manage its risk, which is operational risk. Firstly, risk in Islamic finance. Risk is employed as a framework in historical writing to evaluate events and concerns despite being presented as a phenomenon in its own right. Not only that, but risk concepts have been utilized in practice without a defined word to describe how they work. Risk is defined in finance as the likelihood that an actual return on an investment will be lower than the project return. Al-Ghari defined mukhatarah risk as the circumstance including the chance of departing from the road that leads to the expected or normal result, and the likelihood of loss in Islamic banking. There are four types of risk in Islamic finance, which is credit risk, market risk, liquidity risk, and operational risk.
Hi, Assalamualaikum warahmatullahi wabarakatuh. My name is Nurul Ashikin binti Bahuri. My metric number is 2019239032. Now, I will explain about history Public Islamic Bank Berhad, PIBB. Public Islamic Bank, a wholly owned subsidiary of Public Bank, commenced its operation on November 1, 2008. Public Islamic Bank has provided Islamic financial institutions, goods and services to the common people. These companies provide services to the whole area of Islamic banking with a concentration on consumer and retail finance, the entrepreneurs, either small or big business, financing and deposit taking. Public Islamic Bank has the added benefit of reaching out to the satisfying the expectation of its client through the public bank established reputation and vast network of 264 public bank offices around the nation. Public Islamic Bank illustrates track record is backed and guided by their distinguished the board of directors and SHARIAH committee, which guarantees that Public Islamic Bank is on the correct route, not only in the term of profitability and stability, but also in terms of SHARIAH compliance.
Next, we move to the 4.0, how PIBB manage its risk. There are four risks in Public Islamic Bank Berhad, which is credit risk, market risk, operational risk, and Sharia non-compliant risk.
Now, I will explain about how PIBB manage the risk, and I will explain about the credit risk. Credit risk is the threat of losing money as a result of a counterparty's inability to pay on time or in full. Credit risk, also known as external systematic variables, internal financial causes, or moral hazard, might all contribute to underperformance. Furthermore, credit risk is one of the primary issues that has a significant impact on banks' ability to develop in the future. If credit risk is significant, bank will be harmed and will have to deal with other issues such as settlement and clearing in operation and transactions. Next, how PIBB manage credit risk during pandemic COVID-19. Due to the enormous uncertainty created by COVID-19 crisis, management overlay is given in anticipation of a possible worsening in credit risk for humanitarian aid funding. For this issue, PIBB assessing the amount and timing of the future cash flows, determining a significant increase in credit risk, and computing in payment losses using forward-looking information are all instances. Public Islamic Bank Berhad also recognized moratoriums, reschedule, and restructuring for eligible customers rather than in reaction to individual consumers' financial condition in being offered as part of extraordinary government attempt to boost the economy in the aftermath in the COVID-19 outbreak.
Okay, we continue to market risk. Market risk is the potential loss to bank from a position taken in a contract where the Islamic bank is exposed to ownership and price risk. It can occur, for example, when a bank conducts a murabahah sales that actually involve the purchase of an asset, which will then be sold on credit. We can see in Surah Al-Baqarah in verse 195, and do not deliberately throw yourself in danger of destruction and improve your deed. Indeed, Allah loves those who strive to improve their deeds. Okay, we continue to the process taken by PIBB in addressing market risk. First, they use identification method, which means PIBB took the initiative by using a review of economic data and outlook. Next, they use assessment and measurement, which means they use mark-to-market techniques. Third, by using a control and mitigation, which means by setting of risk, limits and triggers. Lastly, they use a monitoring method by they have to periodically monitor risk profile reporting.
Next, we move to how Public Islamic Bank Berhad manage its operational risk. The first one is the risk of loss coming from insufficient or failing internal process, people and system, as well as external events is known as operational risk. A loss or hazard occurrence sustained as a result of internal and external events linked with bank operation is also referred to as operational risk. The bank's operational risk management goal is to keep the bank's operational risk at management level. Next, there are 4 steps of how Public Islamic Bank Berhad manage its operational risk. Firstly, by identify the operational risk and report the incident. This bank use stringent traditional techniques for hazard identification, analyzing increasing numbers of risks using one of the fundamental instruments. Secondly, assessment and measurement. The validity of the model structure and the availability of data are critical factors in the accuracy of risk measuring methodologies. The third process is control and mitigation. Risk control may be described as a method of reducing the amount of hazards. Finally, the last process is monitoring. Some firms, particularly in the financial industry, have implemented continuous monitoring or early warning system based on important risk indicators.
4.4 Shariah non-compliant risk. Shariah non-compliant risk falls under operational consideration and is relevant to ensure operations are executed in adherence to the applicable Shariah rules and principles as per fatwa, policies and procedures approved by the IIFS Shariah Board. Shariah non-compliance risk is the risk of legal or regulatory sanction, financial loss, and non-financial implication including reputational damage which the bank may suffer arising from failure to comply with the rulings of the Shariah Advisory Council of BNM, which is Bank Negara Malaysia, standards on Shariah matters issued by BNM pursuant to Section 29 of the Islamic Financial Service Act 2013 or decision or advice of the SC of the banks. According to the Annual Report 2021, Public Islamic Bank Berhad, there were 2 Shariah non-compliance events detected during the period under review. The nature of the Shariah non-compliant events are as follows. The first is financing conventional mortgage reducing personal accident for Islamic financing. The second is granting of cash line facility to non-individual customers, which falls under PIBB's negative list for Islamic banking activities.
Okay, we continue to suggestion for PIBB to minimum the risk. First, banks should be exposed to an appropriate credit risk environment. Next, the strategy used by the risk division manager must be more effective. Besides that, banks should also have robust lending procedures. Other than that, by maintaining good credit administration, measurement and supervision, also one of the strategy. Not only that, the PIBB should be monitored and measured daily based on established price models, while trading and investment positions are adjusted to daily market price. Lastly, by tightening the Islamic Financial Service Act to replace the previous Islamic Financial Acts. For the conclusion, risk management and the importance of managing risk are clearly emphasized in Islam. Risk management techniques and approach depends on the objective and goals of the organization applying the risk management. The risk action taken by PIBB in addressing or reducing this risk is a wise move. For the risk management, they use a method by compile a comprehensive list of risks, identify the risks associated with the group, and assess the risks associated. For credit risk, market risk, and operational risk that having by PIBB, they use the same method, which is by identification, monitoring and assessment and measurement, and last is control and mitigation. Thank you.
Thank you for watching, everyone. If you guys have any questions, feel free to ask us. Goodbye.